The bank manager pushed the application form back, across the desk, too far for George Thompson's hand to reach. "I'm sorry, Mr. Thompson, but we cannot provide a loan for this neighborhood." George asked about his credit score. The manager didn't answer. He asked about his income. The manager smiled, but his eyes weren't smiling. George understood. The question wasn't about credit score or income. The question was about which neighborhood he lived in on the map, and that neighborhood had been marked with a red pen. In the 1960s, banks used maps prepared by the Federal Housing Administration, dividing cities by colors. Green meant best, blue meant still desirable, yellow meant declining, and red meant hazardous. Red neighborhoods were neighborhoods where black families lived, and mortgages weren't given to red neighborhoods. This policy was known as redlining, and it systematically excluded millions of black families from home ownership. George Thompson didn't give up, because giving up meant he couldn't teach his children that renting was temporary, that home ownership was permanent. That night, he sat at the kitchen table with his wife, Dorothy. Neither of them spoke. They just thought. Then Dorothy said something. "What if you didn't apply?" George looked at her. He didn't understand what she meant. Dorothy continued. "A white friend could apply on your behalf, papers in their name, then transfer to you." George shook his head. It wasn't illegal, but it wasn't honest either. But then he thought, when a system systematically excludes you, you have to be creative to get around it. Straw buyers became a common strategy in the 1960s. A white friend or acquaintance would buy a home on behalf of a black family. They'd take out the mortgage in their name. Then the property would be quietly transferred to the real buyer. Sometimes these friends were true friends, taking the risk. Sometimes they were entrepreneurs who did this for a small fee. But there was always risk, because the transfer process would take months, and during that time, the legal owner was the straw buyer. If that buyer ran away, sold the house, or changed their mind, the black family would lose everything. That's what happened to Thomas and Clara Williams. Their straw buyer, a white man named Jim, got a loan for a nice house in Detroit. Thomas and Clara paid rent to Jim. Jim paid the mortgage. Everything was going according to plan. 6 months later, Jim disappeared. He didn't answer their calls. When they went to his address, he had moved from the house. The mortgage stopped being paid. The bank took the house back. Thomas and Clara lost $3,000. They had no legal recourse because technically the house was never theirs. But for some, the straw buyer strategy worked, and George Thompson was lucky. His friend Robert, a white man and union colleague, applied for George. The mortgage was approved. The deed came out in Robert's name. A year later, it was quietly transferred to George. George and Dorothy moved into a 2-story house in South Side Chicago. Most of the neighbors were black, but a few weren't, and those few immediately put up "for sale" signs. White flight was real. When a black family moved into a neighborhood, white neighbors would panic. Real estate agents would exploit this, going door to door warning that the neighborhood was changing, saying home values would fall. Whites would sell, prices would drop. Then the real estate agents would sell the same houses to black families at inflated prices. This was called blockbusting, and it was an industry. But George bought a house, and that, by itself, was a small revolution. Some families chose a different path. They didn't try to get loans because they knew they wouldn't get them. Instead, they saved money within the community, a system known as rotating savings and credit associations, ROSCA. 10 or 20 families would come together. Each month, they'd deposit a certain amount of money into a pool, and each month, one family would take all that money. That family could pay for the house in cash. The next month, another family would take it, and so it would continue. The system required trust, because if one person took the money and ran, everyone would lose. But most of the time, people didn't run.
because this wasn't just about money. It was about community, about survival, about proving they could accomplish something together.
Lucille Barnes joined such a group in Atlanta. Church members. She paid $50 every month. 12 months later, her turn came. She got $600. It wasn't enough for a full house, but it was enough for a down payment, and the seller, an elderly black man, allowed Lucille to move in, and she paid him the remaining amount directly in monthly installments. This was called a contract sale. Contract sales were common because for families who couldn't get mortgages, it was the only option. But it was dangerous. With a mortgage, as long as you made payments, the house was yours. In a contract sale, the house wasn't yours until you made the last payment. This could take 10 or 20 years, and during those years, if you missed a single payment, the seller could evict you. You'd lose all the money you'd paid. You had no legal rights. In Chicago, thousands of black families were victims of contract sales. Speculators would buy houses cheaply from white owners, then sell them to black buyers at 2 or 3 times the price. When a single payment was missed, the seller would take the house back, sell it again, and the cycle would continue. Lucille Barnes was lucky. Her seller was honest. She paid every month for 5 years. She didn't miss a single payment. In 1967, the deed was transferred to her. The house was finally hers. Some families bought together. 2 or 3 families would pool their money and buy a house. One family would live upstairs, the other downstairs. Sometimes even the basement would become a unit. This wasn't technically legal. Building codes didn't allow multifamily use, but inspections were rare and families stayed quiet. In Detroit, the Johnson family and the Carter family bought a duplex. Mortgage payments were split in half. Neither could pay individually, but together they could. The children grew up together, they shared the backyard, they shared yard maintenance, and decades later, both families owned their own homes. The children grew up and left, but they remembered that 2 families could accomplish something together. The savings jar was in almost every home. Banks often didn't give fair interest rates to black depositors, and branches in black neighborhoods were few, so families saved cash. Jars were hidden on the top shelf of the closet, under the bed, inside a loose brick behind the wall. Each paycheck, some amount went to the jar. $1, $5, $10. Slowly it accumulated. Evelyn Harper saved for 12 years. She never went on vacation. She didn't buy new clothes. She cooked at home for her children instead of McDonald's. Every week, $10, sometimes $5, sometimes $20, and the jar filled. Then another jar. In 1965, she had saved $2,400. It was a down payment for a house in Philadelphia. But the homeowner, a white man, refused to sell to her. "I already have a buyer," he said. Evelyn knew that was the real reason. Weeks later, the house still hadn't sold. Evelyn came back, this time with a white friend. The friend said she was interested. The homeowner was excited. The price was negotiated, a deal was made. Then, at the last minute, the friend backed out. "I'm sorry," she told the homeowner, "but my friend Evelyn really wants this house, and I've seen her money. She can pay." The homeowner's face turned red, but what could he do? The deal was public. Refusing would be open discrimination. Evelyn got the house. Sometimes neighbors would help. When a black family wanted to move into a target neighborhood, a white friend or church member living in that neighborhood would mediate. They'd talk to the homeowners, guarantee that the family buying were good people. This method didn't always work, but sometimes it could. In 1962 in Milwaukee, a Lutheran pastor vouched for a black family from his congregation. The homeowner hesitated. The pastor talked with him for hours, quoted Bible verses, made a moral appeal. Finally, the homeowner softened. "But if there's a problem, it's your responsibility." The pastor agreed. The family moved in. There were no problems. In fact, within a few years, the neighborhood accepted more black families. The pastor's courage opened a door.
Some families never moved. Instead of pooling their money to buy a house, they focused on improving their land. Redlining didn't just prevent home buying, it also prevented getting loans. Even if a family already owned a home, they couldn't get a loan to repair it. So repairs were done with cash, slowly, one room at a time. James Patterson's house in Birmingham was under construction for 10 years. It had holes in the walls, an old electrical system, rotten windows. But James set aside some money each month. He did do-it-yourself projects on weekends. Neighbors helped. One man fixed the roof. Another fixed the plumbing. James bought the paint, and over time the house transformed. It wasn't perfect, but it was his, and that mattered. Neighborhood meetings became planning meetings in church basements, living rooms, back porches. Black families would come together, share their experiences, discuss strategies, which banks were least discriminatory, which neighborhoods were moving, which real estate agents dealt fairly. This information spread word of mouth, a kind of underground guide, a survival manual. Some families resorted to routes that weren't entirely legal: fake documents, inflated income statements, fabricated employment letters. Was it risky? Yes. Was it desperation? Yes. But at the same time, it was an effort to survive in a closed system. And finally, some families just waited. They waited for laws to change. The Civil Rights Act of 1968, also known as the Fair Housing Act, declared housing discrimination illegal. But the law didn't immediately change everything. Banks still found ways to deny. Real estate agents still steered black buyers to certain neighborhoods. Homeowners still said already sold. But the law gave a weapon, a legal weapon, and over time that weapon was used. In 1975, George Thompson sat down and wrote a letter for his daughter. His daughter had finished college and was thinking about getting her own house. George wrote to her, "When the bank says no, it doesn't mean you say no. It means you need to find another way, and you can do it because I did it. Your father did it, your grandfather did it, and you will too." That letter was framed, and today it still hangs in his daughter's house. Now his daughter has a daughter, and when she looks at her grandfather's house, she doesn't just see a house, she sees a legacy. She sees proof of survival. In the 1960s, banks drew red lines, but black families crossed those lines with straw buyers, with community savings, with contract sales, with joint purchases, with solutions, with patience, and with an unwavering faith. A house is not just a building, it is security, it is permanence, and it is a message to future generations. We were here, we fought, and we won.